What's going on, guys and girls? Welcome back to my YouTube channel for the first video of 2021. So I hope you guys have had a good start to the new year, and I hope you enjoyed my last video as well. So in today's video I'm going to be doing a trade recap on the DAX and on NZDJPY, two trades which I currently have already closed. I took them this week and last week, and in total they banked me about 1.9%, and although it could have been more, there's still a lot of key lessons to be learned, and I'm going to share some of them with you guys in this video. So if you haven't already, hit the subscribe button, hit the like button, and hit the notification button so that you get informed when I do make uploads like this one. And without further ado, we're just going to get into today's video. So I actually did forecast this, and what I first found out was that we had this ascending structure and this ascending price action. You can see here we had higher lows each time. We were just still getting higher lows. So I knew that it was in a very successful uptrend. And if we back out to the daily time frame, you can see that we are at the top of key levels. This is the pre-COVID highs, the highs from 21st of February. So I knew that this was an overall good value area to be looking for short setups in, just because we're likely going to see a reaction from this level. And although we did actually break above it ever so slightly, if we just plot this on with a ray line tool, we did break above this level slightly, retest it here, but that wasn't the overall cue to go long just because we had a retest, because price can still come back into the pattern. And that's exactly what we did see happen. So price can break above previous highs, and it doesn't mean that you can't go short or long, because in the markets any direction is possible. We just have to bear in mind that just because we do break and retest a high, it doesn't mean that we're gonna just see straight buys. Otherwise, you can see here we've been having lower highs, lower highs, lower highs. We did have a higher high here, but this was only to fill that ascending, which was then just the impulse correction, and then the impulse down which we saw, and which we were actually riding the waves. So what did I see on here? Like what's going through my mind when I'm looking at this, because I don't have any drawings on the chart, and I also have switched up the chart theme. The real incentive behind switching up the colored chart themes was really because I thought in my subconscious mind I was creating an unconscious bias towards the market because of the green and red candles. So that, like, for a psychological side of trading, you can become easily swayed with bias by just looking at green and red candles, because you're automatically in the mindset of taking every short setup or taking every setup long, depending on what your bias is often in the market. So that's why I've switched it up a little bit to grey and blue. I just thought this was a bit more neutral, baby blue and grey, flat colours, nothing too sporadic like green and red. But regardless of that, what was I looking for? So we had this high, and I'll plot this high on. We had this high, and I was looking for rejections, and we were starting to slow down here. We were forming this ascending channel, which is one of my go-to setups, because I know that ascending channels usually indicate a reversal that is about to happen. So ascending channels usually indicate prominent reversals in trend and in market nature. So when we started coming up to these levels, we started rejecting it. Even though we were getting higher highs, you can see throughout the whole pattern, higher high, higher high, higher high. Even though we were getting that, the last one, which was the third touch, 1, 2, 3, we had a straight rejection. This was the bearish engulfing candle, which actually triggered me into the trade. It was about here, and it was 10 in the morning. So 10 a.m. This was during the London session. New York session wasn't yet open, but the European sessions were already live and in trading. So I was triggered into the trade here at the break of this phase line, which you can probably imagine yourself. We had these lows here, and we were set below the previous low, just so I can confirm that lower low. And what did we happen? We had the lower low, which was confirmed. So at this point, I was already saying, right, well, we've got the lower low. So next I just want to see a lower high, and then what did we get? We got the lower high as well, and this was sort of, you know, indicating that price was about to do something like this. What did happen? So if we just replay price back to when we got triggered in, you can just see how we were getting higher lows, and then we were getting higher highs on the long term. But then once we started to get a lower low here, and we were getting longer term lower highs, this was the indication for me that we were going to see some sort of switch in trend and switch in market direction, and that's exactly what we got. If we just remove the replay tool, then you can see in these areas, like, how was I managing this? Because management in trading is very important, because if you have no management plan, then anyone can place trades, right, but no one can manage a trade effectively and efficiently. So we had this low here, and I knew that price was gonna come back and retest this low, but I also didn't want to risk, you know, price pulling back exponential levels and then coming back in, because although in the end we did actually get another move lower, and I was tagged out of the trade right around here, I knew that this wasn't going to keep going for long, because with indices you can never sell them for longer term without any real fundamental motive behind it all. So like, say when we got, if we just head back over to the daily time frame, if we just delete the drawing tool, back in, you know, these areas when COVID was at its, you know, when all the talk in the media and the news was driving this market completely down, that was the real motive behind it, right? A pandemic. This was what was shooting the markets down. So when there isn't a real incentive like that, you can't be really looking to hold this all the way down to these lows, because that's going to be a move of what, let's say, yeah, 20%. You're not going to really be wanting to look at 20% moves, especially if there's no real incentive and no real fundamental reason as to why you want to be holding longer term shorts on things like equities, things like stocks, etc. So I was eventually tagged out of the trade, and there wasn't really any regrets from my side, because I locked in 1.9%, got tagged out for 1.9%. At maximum, price was running at about 3.5, 3.56, and although I was giving back, what's that, 1.3, 1.4, 1.5% back to the markets, I felt like that was the best move to make, and it was within my plan. So I was just looking to follow my trading plan, because at the end of the day, price could have just created a flag here, and then I would have trailed my stop above. But in these areas, there was no real structure, because this was just so impulsive that price wasn't giving us any structures. Apart from, you know, we had this low, price came to retest it, dropped back, created that higher low. And then I said, well, from here, the only real way forward is up, because we have already got that confirmed higher low. It is sort of acting as a double bottom, and then price pushed up. But I was out of the trade for 1.9%. And now what am I looking for, right? We have this descending coming in. So I want to see if price is corrective here, and if so, just look to take this back up to these levels. But if we start to see some impulsivity on the rest of the indices across the board, then we already formed this flag, so there is some reason why we would head lower. But for things like Australia 200, I'm already short on Australia 200, so my overall bias for indices is quite bullish. So next pair which I was short on is NZDJPY. So Kiwi yen, you can probably already see what I was looking at here. So we had the ascending channel. If we back out to the higher time frame, there wasn't really anything here. I just thought that price was a bit overextended. You can see we've breached all these highs, right? So the next real level was around 76.8. So 76.8 was quite a distance away, maybe 300, 400 pips. At the time, like 500 pips. So I didn't really want to be looking to see how far we could go, especially when we've already created this pattern. So this is a pattern if we just pull price back, this is a pattern which I've seen play out many times. I don't really know like how to name it, but we usually see the double bottom, the move up, breach of these highs, and then a retest, and then a very choppy price action here. And then I was just looking for price to break beneath these lows, right? And if we formed a corrective structure retesting these lows, I would be looking to get short. So if we just exit replay mode, you can see we did get a sound retest of these lows. If we just draw these on with a ray line, you can see this level did play a key role in this pair's move down. So these levels retesting this area of key area value around 75. It's a psychological level, so there is no reason why it wouldn't play a key role. And price kept trying to break, the bulls kept trying to break above this level, but it just didn't work. Every time we went back in, we would have a bearish engulfing candle down beneath, or evening star. You can see here bearish engulfing again, and then the move down. Almost no major pullbacks apart from this wick here. But my trade on this, how did my trade go? So I've talked you through the technicals, and I'm going to talk you through what I was actually seeing here. So we had this ascending, which I've already sort of talked about, and then we started to see impulses down. So we started to see bearish engulfing candles here. We got that lower high. We got the second lower high, but we were still getting higher highs on the longer term, right? And we were getting lower lows. So when we're getting higher highs and lower lows, there isn't really any certain direction which price is bound to go. It could go anywhere at that point. But when we came from an impulse down, we're getting higher highs and then we're getting lower lows. The most plausible scenario is for this to continue the impulse down, which is what we see. If we're getting higher highs and lower lows at the top of structure, say something like, let me just use the bars replay tool. Say we're getting something like this. Right, just bear with me. Say we're getting something like this, right? Something like this. And then we start to get higher highs and higher lows right here. Then I would be looking for short setups because we have the overall double top, and this is just acting as a corrective structure to then get short at. So these are the only times when I'd be looking for short setups and expanding. It's if we have a swing high previously to that, so that we can then start to see a rejection, and then if we get the double top within the pattern or the bigger double top, or price breaks above slightly then comes back in the pattern. Those are my three top scenarios for taking expanding patterns long and short, because they do work both ways. So it was about here. So when I did see that price has created the bearish engulfing pattern to reject the top, what I was then looking for was to set my entry order. So we had this low, and I wanted to see if price could make a lower low. So I set my entry order below this low, got tagged in sooner or later. Price moved all the way down here. We were running 1%. So I said, right, we've just broken a phase line. And in my plan, if we break a phase line, I always want to move my stops to break even when we're running 1%. The main reason behind this is because price can break and then it can keep going higher. And then it can form, a deeper correction. We just use the replay tool. It can form a deeper correction like so. And then if I'm in from here, then I would have this drawn out like this. But if I'm in from the break, right, you're gonna be suffering, some decent drawdowns, and that's exactly the opposite of what you want to have. You want to most likely be getting in from the top, but when we have structures like this, you'd want to be getting in at the break of a phase line, just so that you can get in with a tighter stop loss. And that's the only real reason why I would want to be getting in at the break of a phase line. so that I can have a tighter stop, and that would substitute for a slightly wider reward. But in trading, not everything's about the reward. If you're only looking for the reward in trading, then you're not going to get very far, because you need to be more focused on the process rather than the outcome of the trade. And that is one of the reasons why many people fail at trading, because they're too focused on the outcome of trading. Then they can never really focus on their process, because their mind's fixated on the profit, and they end up missing out key elements that they should be implementing into their own trading, because they're too focused on the money side of trading. And don't get me wrong, it is important to focus on, the profitable side, because that's why we trade. But you need to get yourself in a state of mind where you're neutral in the markets, and you're not just looking for setups which can provide you with huge risk to rewards, because a lot of the time you might just get stabbed in the back, and you might feel like the market's against you, which isn't true. It's just that you aren't doing everything in your power to actually make yourself a better trader, if you understand what I mean. So this was Kiwi Yen. Kiwi Yen, it resulted in a break even. I got tagged out around here, and overall I was looking to see if price, if we just hide this, I was seeing if price would create a flag so I could get short. So I was looking at this to see if price would move down, but in the end we didn't get that. And in hindsight, I would probably say don't move your trade to break even too soon. But again, hindsight's a wonderful thing, but we can't afford to keep looking back in hindsight and saying that you would do the complete opposite, because it was in the moment, right? And emotions in trading are something which impacts everyone. That's one thing which keeps all traders in the same bracket, right? Everyone suffers from emotions, because you can't get rid of emotions. All you can do is create ways around it in your trading plan to avoid being influenced by your emotions in the markets, because at the end of the day, if your ego is involved in your trading, you won't make it very far, because all you're looking for is profit, and you're looking for the big risk rewards. And what I see a lot of people do, and I see a lot of people who come into trading, come out of trading, what they tend to do is they tend to want to take setups like this, right? They'll be like, ooh, let's get short here, let's put stops at 6 pips, let's look to hold this for 20%, right? And yes, you can do that once, you can do that twice, but you'll find most of the time you just be tagged out. Look, you get tagged out here. Look how tight that stop is. A wick can tag you out. A wick can tag you out here. And yes, if that way works for you and you found it to be profitable, do it. But you have to be aware that it's probably better to take setups like this, right? 30 pip stop, get tagged out for break even. On this one, on the DAX, 80 pip stop, get tagged out for 1.9%. 2 trades, 1.9%. That was my week done. And I wasn't having any major regrets, because I followed my plan. And to me, that's the most important part of trading. Follow your plan and the results will follow, as long as your plan is, foolproof, and as long as you've back-tested the plan and the method that you trade well enough, and you've collected enough data to support you actually trading that strategy. So that is it for today's video. I hope you guys have enjoyed this. I'm not sure how long this video has been, but I hope you've enjoyed this trade recap on Kiwi Yen and on the DAX. If you would like more trade recaps, just be sure to like and comment on my videos, so I actually see you guys what content you want me to be pushing out. And yeah, without further ado, I'm going to end the video right here. I hope you enjoy the rest of your week. Take care and stay well.